All right, so this is the number two video of a series that I'm going to make on day trading or swing trading. So in the last video we talked about how the inflation report, the CPI report, that actually caused the market crash. There's a 4.5%. Actually, at the end of the day, the S&P was down. I mentioned that the S&P will completely religiously follow the Bollinger Band and the Fibonacci series. Sort of that happened, but my level was wrong. So I thought that the zero point 0.5 Fibonacci series, which is around 3982, the stop will be triggered. So S&P will be going up since then, but it actually did happen at 3935. That is the next level of the Fibonacci. But that's what the S&P sort of stopped at the 3934. So it's still following a very strong technical regime, and I expect that to continue. So tomorrow, the future currently at 6 o'clock Pacific time, it looks like the future is around 4 basis point up for S&P, but I expect that it to continue to go to next level, which is the 3882. It's going to go down 50 points down easily tomorrow, and then it's probably going to test that if it holds there, because the momentum is so strong, it's highly possible that based on 4% down today, that if we do break this Fibonacci series tomorrow morning at 3982, sorry, 3935 right away in the first few minutes in the S&P, there is every possibility that tomorrow will also break the 3882 level. That was a previous intraday low a few days ago before it bounced back. And I expect that to continue for a while. And if you look at the QQQ would actually, next support is around 278. Right now, it closed today around 290. So there's another 12 points, or about close to like a 3% to go for, is it 3%? No, around 1.5% to go on the QQQ for the next support level. So I think that Nasdaq sold off pretty bad today. So maybe it'll give a little bit of respite. So maybe it'll just test that level for the QQQ tomorrow, just going down by about a 1%. And it will probably bounce back from 382 level S&P. But if there's a stronger selling force, then probably will break the 382. In that case, it's pretty certain that we're going to actually go test the 3600 level. But it is also true that the news will subside in a little bit, probably next week, when actually it'll come, the narrative will become that, hey, 100 basis point, if the Fed hikes 100 basis point, then it's negative, but otherwise it's baked in. So in that case, the S&P will, when actually Fed next week, I think it's a 922, they do increase the interest rate by 0.75. That will be seen as a positive, and as a result of that, the S&P will, until then, it'll be very volatile, but it'll probably start to consolidate around that range. And as soon as it consolidates, the algos will come in, and within a week, it'll start buying. So before you know whether it's going to 3,300 or is going to bounce back, the algos will kick in, and you'll think that there will be buying opportunities coming in later when stock goes to 3,300. But even if it happens, before it happens, stock will go up, and then you'll miss another opportunity. That's why it's always important for retail investor to do the dollar cost averaging. So I did do the three, uh, I bought early today, one Amazon, 125 sold put, 10 put sold. And when I sold this put, it was 131. I sold it for 70 cents. And when, at the end of the day, it was around, the stock was trading around 127, so around $1.5. So I'm losing there. Then there was this NVIDIA, which was around 138, when I sold a 125 put for, this Friday at 28 cents. Now that same is about, I believe, close to $1. And same thing with the third stock, which was that I sold put for AMD, and that was about same around that same price range for 75, expiring this week. That was 80 around the time, but the market closed around AMD was about $77. So I'm expecting that all of them will go down, and I'll get assigned those 1,000 stocks each for all the three different stocks. But these are quality stocks, so I'm guessing that I'm not if there's a market bounce, so it will go up above that level. But nevertheless, the timing is wrong. I calculated that there will be a bounce back from 3882 as I mentioned in the last video, but turned out that S&P went all the way down uh, from 2.5% when it was at 3982 all the way down to 3925-ish, and then it settled at 3933, which is the next Fibonacci level. I think it was a 0.621 level for the Fibonacci. The next stop is at 3882. So it was a ferocious jump all the way from the morning. The future of the S&P was 4140 just before the report happened, and after the report, obviously the future went down, and from 4040, not 4140, from 4040, it was 4140, yes, 4140. It went through vociferously through the 400s and through the 4000s all the way to 3900 level. So it was a very, very interesting watch, and it's going to continue. This kind of momentum does not stop on one day. It's going to continue tomorrow as well. But I'm pretty sure at some point the buy the dip will come in. So the mistake that I have done in the past is that to take the loss, but I hope that I don't have to do that this time. But somehow I have to hedge it by selling the stock, shorting the stocks while I hold the put. So yeah, so we'll see how it goes. So that's the video number 2, updating what was the day today after a very eventful CPI release day.